Hello, everyone. Good evening. Welcome in. Welcome in. If I could get a mic check real quick, a 555 would be great. Hey, Ellen. Thanks for joining us. Hello. Denisha, thanks for taking the time to do this session for us. It's my pleasure. Thanks for joining us today, Denisha. Hope you're doing well. Hope you had a great weekend. All right, 555. Thank you, Ashley. Thank you, Denisha. Bean, thank you very much. Sweet. All right, well, let's go ahead and get into it. Not going to take too much time today. I'm going to do a brief overview of what I'm looking for this week, my expectations, longer term bias, and share what opportunities we have in front of us this week. So with that, we're going to go ahead and get into it. Real quick, I do want to touch on the economic calendar. So we have high impact news Tuesday through Friday, which is why my interest is primarily going to be in those trading days. And then also one thing I did want to touch on again is the August price action. So keeping in mind, I have a protocol for the month of August, as I've learned over the past few years that August is a difficult month through experience. So whenever I'm sharing with you guys how I'm managing myself, my protocol, that's me lending you my experience. So with that, going into this review, I'll even share some things as to why August is a characteristic sloppy month, and we'll touch on a few things there. But with that, without any further delay, let's go ahead and get into us. Bean, thank you as always. Thanks for joining, my man. Musa, hello from Lebanon, brother. Thanks for joining us, Musa. Awesome. So let's get into it. So dollar index on a monthly chart. So here we have the Dixie. So we see that we traded into these equal lows, sell side liquidity. And then I took our attention to how we've rejected that sell side and how we are now bullish on this month as we've been expecting. So we've just taken out previous month's high here, and I am expecting us to continue expanding higher into the buy side here, and then eventually on a longer term, I'm looking for this inefficiency. This SIBI, sell side imbalance, buy side inefficiency, is the target I'll be looking for longer term. And then as you guys know, for a long-term outlook, this is my intermediate term outlook, I'm expecting us to trade up into the 115s, 116s, and then even potentially 120s. So that's what I'll be looking for on a longer term basis. So with that, let's drop down into our weekly chart. So ever since we traded here and we closed at this mean threshold, use it as support, we've been calling this market higher, more specifically to these relative equal highs. So previous week, up close candle, as we've all been expecting, into the buy side liquidity. So now going into this week, we have bullish order flow. We've seen 1, 2, 3, 4, 5 bullish weeks, and we've delivered to internal range liquidity. So what I'll be looking for moving forward is continued bullish order flow, seeing how we've rejected these lows. Order flow's bullish, up close candle. We've traded through it. We did not reject it. So to me, order flow is bullish. So that's how I was able to call higher prices. So now moving forward, looking at this weekly inversion fair value gap here, extending this through, I do want to see this lend support and trade higher. There's no reason for us to trade back down in and retrace, as this is all efficiently delivered here, except for this fair value gap. In longer term, if we are to deliver bullish as I'm expecting, I would prefer to see this be a breakaway gap anyway. So in other words, I'm looking for higher prices, weekly fair value gap, want this to lend support for the buy program. And then for a weekly chart, I'll be looking at this rejection block in here, the highest up close. And then through that, I'll look at the buy side liquidity as an upside target. Do I think we will reprice all this week? Probably not, given that it's August, and you guys will see in the intraday price action, it's just really sloppy, and you guys will see why I don't like to trade it as much. So on a weekly chart, just expecting that continued bullish order flow. We see here we traded down to this candle's high, immediate rebalance. So I would want to see us accelerate from here and use this discount inefficiency as a support, as a springboard higher. Good to be back, Mr. A. Solomon. Thanks for joining us, Solomon. So Zib from UK, thanks for joining us, brother. Good to have you. All right, so looking at the daily chart, it's a bit busy here, but there are quite a few things I want to take our attention to. So looking at last week, we've been bullish, looking again for these relative equal highs in here, and then we've smashed through those beautifully. So one thing I did want to take our attention to is August characteristics. So seeing how there's a lot of just back and forth here each day, no real acceleration, is why I prefer not to trade it. As I discussed with you guys last week, I like to trade clean price runs like these or these here or this run higher. I'm not personally a fan of trading high resistance market conditions. Can I trade it? Absolutely. I just prefer to do other things with my time. So looking at this here at last week, I'm going to take our attention to this balanced price range that we discussed. So looking at this gray box, why is this a balanced price range? Again, because it offered both sides and then we've left it. So when we opened up here on Monday, I told you guys I wanted to see this act as support. You see we use it as support Monday into Tuesday, and then each day gravitating higher into the levels we've been looking for. Another thing I want to take our attention to here is this daily fair value gap annotated by the two black lines here. So we closed above it on Friday. Monday used it as support. It was unable to trade down to the discount end of this fair value gap, which is bullish, and we use it as support. So I'm expecting this to continue here. So as a first target on this week, as I said, I do want to see us find support from this weekly fair value gap here in blue. As a first target, I like previous week's high, which is close to this buy side liquidity here. So that's what I'll be looking for, a bit of a more meaningful run above these equal highs. And then through that, I like this volume imbalance here, this inefficiency. And then we have that weekly rejection block. And then longer term, we have this buy side liquidity. So my attention is higher. What would invalidate my bullish bias? It would be closing down below this weekly inversion fair value gap here and this breaker. So here we have low, lower, low, this last up close candle in here. That is now our bullish breaker. We're seeing a lot of sensitivity around that price level here, and I would want to see this support price higher. So that's what I'll be looking for on a daily chart. So dropping down into the hourly. Last week's trading, we started trading, take this off, here on Sunday. And then yes, each day did expand higher, but look at the lackluster delivery. It's not in a hurry to get anywhere, deep retracements. If you're an intraday trader and don't have as much experience, it's very easy to get frustrated in these type of conditions. But the great thing is it's no surprise to us. Understanding time and price and seasonal tendencies and the effects that has on the marketplace, we were all over this. So being able to forecast this is a skill set in and of itself, and a very underlooked one, simply because if you can understand how to rule out low probability days, your strike rate as a trader will rise significantly. So looking at this here, typical August price action, is it tradable? Absolutely. However, I prefer not to do so. So going into this week, this screams 50-50 to me. We're sideways in a consolidation. I can justify the run higher. I can also justify the run lower to the relative equal lows. So this is 50-50 price action to me. What I did like to see was how we traded lower. We cleaned out the sell stops here and here, traded into this rejection block here, upsetting the liquidity. And then we've traded up higher through that. And we're now finding support inside that weekly fair value gap and order block. So as long as we remain above this bullish order block in here, I will be looking for higher prices into previous week's high here and the buy side liquidity. So as I said, I do want to see this be an intermediate term low as we've traded lower, cleared out the sell stops, and then we've shifted market structure. So now I want to see this order block support price if we are to remain bullish. If we trade through that, then my attention goes to the sell side here, and then we probably have a lackluster week overall. So that's what I'm looking for on a hourly chart. Taking our attention over to the bond market. Let's go all the way up to a monthly chart. Here. Perfect. So looking at T-bonds here, we are seeing bearish order flow on a monthly chart. Clearly, fair value gap, reject, fair value gap in here, reject, and then we've just seen that here where we've traded up into this fair value gap, and then we've been accelerating lower. So I was getting a lot of questions with regard to how was I able to classify a bullish dollar so early on? Because I was able to classify it using intermarket analysis. So yes, it may have still looked bearish on a weekly time frame or monthly time frame, but because I'm using intermarket analysis to qualify these things, I'm able to see a little further ahead as opposed to other traders, which is what makes this analysis, being honest, superior to everything else, because we're able to see things that most traders are not recognizing. So seeing how bonds have been accelerating lower, that's given me confidence to be bullish dollar. So looking at T-bonds here on a monthly longer term basis, this is also supporting the fact that I'm expecting higher dollar index up to the 116s and even 120s come this year. So that would be met with lower bonds, of course. Seeing how order flows bearish, we rejected the sell side, we rejected the fair value gap, running for the sell side here. And then my target on a monthly will be these relative equal lows here and the remaining portion of this inefficiency. So I'm going to go through this one pretty quick. So we've been calling this thing lower ever since this inversion, fair value gap in here, and then each week has been a lower expansion into the relative equal lows here and here as we were expecting. And then I called it here in the previous week, and then we smashed through that. So looking at this week here, we traded higher into the order block, but what else is occurring here? We're seeing an immediate rebalance, meaning this candle's low, the candle that trades after the candle in between trades right up to this candle's low, leaving no inefficiency here. And then what that does is it supercharges price delivery, because if the algorithm were to leave an inefficiency there, it would want to reprice into it. So whenever we see immediate rebalance, that is an extremely bearish signature. And then looking at the order flow that has come after that, we do see how that signature does in fact indicate that. So again, here, just looking for lower prices, expecting continued expansion down into this discount sell side around the 108s. So daily chart, quick. Touch on a couple things. So clearly bearish order flow. We've been all over this. Looking at this retracement here, this traded right up to around consequent encroachment, or 50% of this fair value gap here shaded in orange. And then we rejected that strongly, indicating further weakness, because I gauge order flow by determining the willingness of a market to want to trade through midpoint of inefficiencies. So for example, here, looking at this inefficiency, the fact that we were unable to even trade up to 50% or midpoint indicates what? That the market is extremely weak. And then look at the price action that followed that, aggressive run lower. So seeing that same thing here on that daily chart, and then it was no surprise to us seeing the market accelerate for the sell stops below here. So just gonna expect this bearish order flow to continue here. I would like to see this up close candle here lend as resistance to continue to send us lower. So real brief here, touching on the yields themselves. Anita Lowe, thanks for joining us. Fendix, what market is this? ZB1, it's T-bonds, so it's the bond market. What's significant about the bond market? It gives us insight into what dollar is going to do, because currencies derive value from the bonds themselves. So looking at yields here, and I believe I covered that. So if you go back to the last live stream or the one before, I cover how yields affect the dollar index. So I'm not going to get into that too much here, as I do want to keep it brief. So looking at yields here, we've been calling this thing higher since the propulsion block in here, and then we've just simply seen continuous bullish order flow. So looking at previous weeks here, we traded down into this inefficiency, and then here I have consequent encroachment or midpoint labeled right here of this inefficiency. Note the bodies respecting that beautifully, trading down into this fair value gap, reaccumulating more longs. And then as we were retracing, where was I taking our attention to? We were looking here at the relative equal highs, and then we smashed through that, and then trading into this buy side liquidity here as we were expecting. So still expecting higher yields, which will send dollar higher as well. So let's go into index markets. Let's go to a weekly chart. So looking at the weekly chart here for S&P, one thing I did cover last week was this inversion, fair value gap in here, and it's sharing how we closed below this. So the fact that we closed below this fair value gap indicates weakness. If we were bullish, we'd want to see the bodies respect it. So the fact that we closed below it and we're already bearish because I'm bullish dollar, I took our attention to the sell side liquidity here and this inefficiency, and then the market smashed down into it. But how did it deliver? It opened up, manipulation into the inversion that we were already expecting to be resistance, and then a beautiful smash lower into the stops here and here. So moving forward on a weekly basis, I will be looking for lower prices. We have sell side liquidity here, which would be previous week's low, and then this remaining portion of this weekly fair value gap. And then we have this weekly fair value gap here that I will be looking for. This sell side liquidity is anchored to the daily chart, so you can't really see that here. But longer term, I am looking for this weekly fair value gap here to be delivered. Dropping down into our daily chart. So really just a textbook delivery last week. If we're looking for lower prices, what do we want to see? Some form of manipulation. So the only up close candle in last week's delivery was Monday, which we expect. If we're bearish, we open here. What do we want to see? Some type of Judas swing. High of the week on Tuesday. I shared a trade review video covering a short setup I took, but I was also sharing prognostication moving forward. And I shared how I was expecting this to be the high of the week. On Tuesday, I'm classifying that. So that makes the bias for us easy going into Tuesday, Wednesday, Thursday, and Friday, looking for discount objectives. And I also shared how I was accumulating shorts for longer term positions inside of this manipulation. So I'm selling short above the weekly opening price because that's where we want to be shorting in that premium for the expansion lower. So clearly seeing bearish order flow, inefficiency, trades up into it, rejects. Up close candle, that's our bearish order block. We trade up into right about midpoint there. Oh, let me turn the crosshair back on. Thanks for catching that, Eubene. Sweet. So looking at this order block in here, we have mean threshold or 50%. We trade up into 50% and then reject lower. One thing I did take our attention to also was this daily inversion fair value gap. I shared how I wanted to see this act as resistance. And then what are the bodies communicating to us? That it's clearly weak. And then we see the market accelerate lower to this inefficiency, liquidity here and here. So now going into this week, since order flow is clearly bearish, we're displacing lower. Down close candles are traded to and through, and up close candles are acting as resistance, the definition of order flow. So seeing that we opened here on Monday, we have Monday's trading ahead of us now, which is great. We've traded higher. So if I'm bearish, what do I want to see? Some form of manipulation higher into a premium. So looking at this here, now that we have Monday's trading behind us, I do like how we traded up into a premium, and we're also trading into this breaker. So high, higher high, the down close in between that, extend these two candles through. We're trading also into that breaker. So just to highlight this level here, going to take it off. So that's the breaker we're trading in. So I prefer to see some of this fair value gap left open, and then I can classify that as a measuring gap. So here we have a breakaway. And then if this is left open, that would give me further confidence that we have a measuring gap, and then we can expect this market to go much lower. So seeing how we manipulated higher on Monday, I'm internalizing this as a weekly manipulation to set up the true move of the week. So I prefer to see us reject from this breaker and daily fair value gap and leave some of this fair value gap left open. However, if we do trade up into it, that is not a cause for concern because order flow is still bearish. I would not change my bearish stance on indices unless we get above this inversion fair value gap here with conviction. If we get a closure above it, then I'll have to reassess and wait for more information. However, everything is still a green light for lower prices, and I'm going to be sticking to my guns, expecting bearish S&P, as I am also holding longer term shorts as well. So for my targets on a daily chart, I do like previous week's low here, and I do like how we traded higher off that, building more sell side below to be smashed down into. And then through that with animation, takes us into this sell side here and into this weekly fair value gap, which is what I'll be looking for here moving forward. So real quick here, I want to touch on Nasdaq. Go ahead and take this off. So looking at the Nasdaq weekly chart here we have our weekly breaker. So high, higher, high. This breaker, we're trading up into it now. I would want to see us reject that and go lower. Not going to dress up the chart too much for Nasdaq because it's the same thing as S&P. And then my attention is on the weekly fair value gap in here and those equal lows on that weekly chart. So we have equal lows and an inefficiency. So I am looking at this weekly candle as it is a blue bold face candle. I'm still looking at this as bearish, as if we are looking for lower prices, we do want to expect that manipulation first. So briefly dropping down into the daily chart, high, higher, high, there's that breaker. We're trading up into that breaker now. And as long as we remain below this bearish order block, I am still bearish on Nasdaq. So I do want to see us stay below this up close candle and aggressively run for the equal lows here. So that's what I'll be looking for going into this week, is the sell side liquidity here, as well as this weekly inefficiency. So with that, I'm going to cover euro dollar real quick, and then I'll get into a few questions and then let you guys get going here. So looking at euro dollar, we have been bearish for the past few weeks, and then we have been getting lower expansions. So I have been looking for the sell side liquidity here for really the past 2-3 weeks, and it has not delivered because it's just sluggish market conditions as we would expect in August. So looking at the weekly chart here, I'm still expecting lower prices. I am longer term bearish euro as I am longer term bullish dollar. So I'm seeing this as a 3 drives pattern here into premium. We traded up to the high end of this volume imbalance, and then we've rejected it lower. We've traded up into this balanced price range on a weekly chart, which is where the 2 fair value gaps overlap. So I got a question, can you show and define the fair value gap? Yeah, absolutely. So this is a fair value gap here, where this candle's low and this candle's high do not meet. So we have this opening right here inside this candle where it's just one-sided delivery. So whenever we see that one-sided delivery, that's only offered sell side. So the algorithm is looking to deliver price efficiently. So is it efficient to apply paint down one way? Absolutely not. It's got to offer buy side delivery. So because only sell side's been offered here, it's going to want to trade back up into it and offer buy side delivery. So a little more advanced, why wouldn't I expect this entire fair value gap to fill? Why do I want to see institutional order flow entry drill? Because it's a balanced price range. So because it's a balanced price range, I prefer to see us not trade up to the top of this inefficiency. And then further amplifying this, as we discussed earlier, if I'm bearish, I'm weighing out how we're trading at inefficiencies to gauge order flow. So seeing here how we were unable to even trade to the midpoint of this fair value gap is extremely bearish. And then we see the price action that follows that. So moving into this coming week, I am going to be looking for the equal lows and the inefficiency here. Dropping down into our daily chart. Again, this is why I don't like to trade August as much, and especially not Forex, just because look at the price action we're seeing. Yes, it's delivering lower. Yes, it's delivering the targets that we're expecting. However, the delivery is lackluster and sloppy. So seeing this here, Monday traded higher. I do want to see us smash through that into these equal lows in here. Animation through the equal lows, my attention will go to this down close candle as a second target, and then not expecting much more animation after that. If we do for some reason see more animation through that, then I do like the sell side here, and that's what I'll be looking for. So with that, that's all I had to cover today, I believe. Let me check my notes and then I'll take a few questions. Papa Vlad, hello, what's going on, brother? How are you doing today? Thanks for joining us, my man. Jonathan, how am I looking at this being a balanced price range? I believe you're talking about euro. Yeah, let me go ahead and cover that. So there's different forms of balanced price range, but this is a classic balanced price range where we have 2 fair value gaps that overlap, because here it's upside delivery, downside delivery, and then we've left it. So both sides of the market have been offered here. So this is a balanced price range because both sides have been offered. So if we're bearish, we do not want to see price get through this balanced price range here. Another definition of a balanced price range is one I used and traded. So I share these concepts with you guys because they're what I'm using to call the market. A lot of people just like to teach this stuff in hindsight but can't really apply it. So I basically call the market for you guys, tell you where it's going, and then I simply share the logic that I use to call the market. So this is another form of a balanced price range here. This is a little more advanced price action theory, but looking at this high to this low, why is it balanced? Well, we've offered buy side on the upside, sell side here, and then we've left this price range here. So if we are going to deliver to the buy side liquidity into these premium objectives, why would we get below efficiently delivered price? We shouldn't, because it's already been offered up, down, and then we've left it. So now this should act as support into premium levels because it's already balanced. So the algorithm's not going to want to waste time and deliver back through efficiently delivered price. So think of it like a paint roller. If you're applying paint up and down, are you going to waste more paint on the same part of the wall, or are you going to move on to a part that hasn't been painted yet? And that's the same thing the algorithm is doing here. So if that squares that away for you, Jonathan Velasquez. Mayoa King, what on daily time frame or hourly can disqualify bearish bias on euro? So on a daily chart, so looking at this inversion fair value gap here, this is a busy chart. One moment, let me clean up the chart. So looking at the daily chart here, what would invalidate my bearish bias? So we've been looking at this weekly inversion fair value gap. So where does that come from? Let's look at the weekly chart here, extending that through. I shared with you guys that if we are going to run for these lows, I want to see us close below this, use it as resistance to then send us lower. So that's what I'll be looking for moving forward. So how do I use this on a daily chart? So seeing here how we close below it, trade up into it, I'm expecting price to reject here, and then it does. Trades up into it, I want to see it reject, and then it does so. So to invalidate my bearish bias on euro, we would have to trade above this weekly inversion fair value gap and close above it. However, I don't hold a bias too firm, especially in the month of August, because let me just take our attention to this 1 hour chart. This is the type of price action I do not like to work with. And if I were to work with this price action and call the market for you guys in these types of conditions, you guys would not see my precision be what it is. The reason I'm so precise and I'm able to call the market with high win rate in front of you guys is because I know exactly what I'm looking for and what it is that I'm looking to execute on. When those conditions aren't present, I have to sit still and wait for more information. So this is a market I would not be interested in touching. However, what would invalidate my bearish bias would be getting above this daily fair value gap, or weekly fair value gap, on a daily chart on a closing basis. So I would not want to see us trade above this. And reason being is just because we're really close to these equal lows. So I do want to see us aggressively run for those lows if we are to remain bearish on euro dollar. So I'm going to take a few more questions, and I'm going to go ahead and get going. JJS, can you show me what is a balanced price range? I believe I already covered that, my man, and we will be uploading the recording if you want to watch that again. Mayoa King, thank you. Solomon, how do you see the SMT on the daily with Dow and the assets getting back to their dealing range, which could possibly indicate higher prices? I'm not sure what your question is there, Solomon. So looking at Dow daily chart. So the only SMT I'm really seeing here with the indexes was up here in a premium, and then we did qualify this. I indicated to you guys how I was already looking for a quarterly shift. So I actually forecasted the quarterly shift before the fact. So because we were seeing SMT here between Nasdaq and S&P and the Dow. And then I'm also looking at this in concert with dollar index to gauge market sentiment. So looking at Nasdaq, S&P, and Dow. So here we have Nasdaq. So while Dow is continuously making higher highs here, S&P is making higher highs, Nasdaq is indicating it's not willing to join the party. So what does that indicate to us? It indicates this market is under accumulation of shorts. The fact that it's not making higher highs, this is an algorithmic confirmation that this market is bearish. And we did see that follow. So before we even took out structure here, I was already looking for lower prices. And then once we did, we confirmed it was a quarterly shift, real time, and then we saw the delivery that followed that beautifully. So that's only SMT I'm really seeing on the indices, and nothing is bullish about indices to me. I'm looking at stocks cratering, and I'm positioned for that. So that's what I'm doing with the information. So I'm going to take a couple more questions here. I don't believe I see any member questions, so I'm going to just go and take a couple more and then get going. Can I do a quick Bitcoin analysis? Yeah, let's go and take a look at Bitcoin. It's been a little while. So Bitcoin is looking extremely heavy to me, and I was actually distributing above here. So I was actually closing out of my positions inside of this premium on Bitcoin. So looking at Bitcoin, we've traded up higher into a short-term premium, high, higher high, anemically taking out this high. So if we are bullish, or if someone was bullish here, you would want to see price displace above the high, for example, like we do here. Tweet the swing high, we rip through it. Swing high, we rip through it. So that gives us confidence that we're bullish. But then when we start seeing the market take out highs or lows anemically, that gives us further indication of order flow. Man, I should have charged money for this one. So looking at how we took out this high, this market is extremely weak because it was unable to really accelerate above it. And then we've actually rejected the buy side liquidity here. So seeing how we're rejecting highs and accelerating lower, 2 down close candles, what would that traditionally be? A bullish order block. But it's not a bullish order block if we're in a sell program, which we are. So it traded down, displacing through the down close candle. So the fact that it's not respecting it, and we also have a breaker here, low, lower, low, up close candle, not respecting premium arrays, or discount arrays, excuse me. So the fact that discount arrays aren't being supported, this is indicating to me that the algorithm is in a sell program, meaning it's going to continue seeking discount and repricing lower. So for Bitcoin, we have a fair value gap here that we did close below. That is key. Closure below this low. As long as we remain below this fair value gap, I am extremely bearish on Bitcoin. Longer term, I'm going to be looking at 15K. Acceleration through that, I'll be interested to see us reprice to 12,000. But not getting too far ahead of ourselves, seeing how we close below the order block, below the fair value gap, and we are doing it aggressively with a bullish dollar. So why am I incorporating dollar? Same thing for gold traders or any commodity traders. Everything is priced in dollars. So if the dollar is going higher, automatically things priced in dollars are going to be more expensive. Or actually, excuse me, if the dollar is going higher, it's going to take more dollars to buy these things. That's going to put pressure on it. So looking here, it's Bitcoin versus the US dollar. So because dollar is second in the name and it's strong, that's going to put pressure on this asset. So looking ahead, I do want to see us reject this inversion fair value gap and use this breaker here, bearish breaker, because we have a high, higher high, and a bearish breaker here. So I would want to see us reject from this breaker and not fill in this entire down move here. So I prefer to see some of this left open and then aggressive expansion lower. So dropping down into the daily chart briefly. Let's take these levels off. Aggressive expansion lower. Inversion fair value gap here traded completely through. So I'll just be looking for lower prices. Previous week's low here, and then this swing low here at the 24,000s is of interest to me. And like I said, I prefer to see this fair value gap left open. I do not want to see us reprice all the way up into that, as it would be better to just see us trade up into this fair value gap, institutional order flow entry drill, and then aggressively seek the sell side. All right, so we got Jonathan Velasquez. Thanks, bro. When are you doing 1v1 for the team or mentorship? Oh, yeah, great question, my man. So I was actually discussing with my team this past week, and we are looking to put together our training programs by the end of the year. That'll give us plenty of time to organize it, get things up to our standard here at Adora Trading, and then we will update you guys as we continue to cement the dates and the plans for that. So have your be on the lookout for that towards the end of the year, and then we will send updates into our social medias as we start cementing dates and confirming things. So I will be updating you guys with regard to that as we get closer towards the end of the year here. So I think, oh, we have a member question. Let me go and take that. High Speed Trading Company. Take a look at CL. Absolutely. Let's take a look at Crude. And then this will be the last question I'll be taking today. So let's take a quick look here at crude oil. So we just put on a absolute clinic here on crude oil, calling this thing higher all the way from down here into the relative equal highs. And then we've actually just delivered that into the previous couple weeks. So looking at this here, given that we've had such a big move higher, 1, 2, 3, 4, 5, 6, 7 up close weeks in a row. So because we've had 7 up close weeks, it's logical to expect a retracement, especially considering that we've traded to a significant objective. So yes, we traded to the buy side liquidity here, and we also repriced to the high end of this inefficiency. So extending this inefficiency forward here, we reprice to the high end of that, and then it would be logical to expect a retracement, which we are seeing. So for crude oil on the downside, what I will be looking for is this fair value gap in here. I am still longer term bullish crude oil, so I am looking at running lower into here as a potential stop run. I do want to see this fair value gap left open, and I would prefer to see it be a breakaway gap. Why? Because if I'm looking for crude oil to trade back into the hundreds again, then that would be a beautiful setup to send us higher, seeing this fair value gap left open. So I want to see us trade down into this weekly fair value gap, and then how we trade there will be helpful to me at the time. So if we trade to it, find support above constant encroachment, that would be great for higher prices. If we do get a closure below it, then I would assess potentially trading into this inefficiency here. But not getting too far ahead of ourselves here, just looking at this week, I am looking for these relative equal lows and the inefficiency here. So looking at our daily chart, again, looking at these relative equal highs, repricing into that beautifully, and then we see a 3 drives pattern. So remember what I just covered on Bitcoin. How if we're bullish, what do I want to see? I want to see the market displace through swing highs. For example, right here, we displace and trade through it with the fair value gap. So swing high here, displacement through it. Swing high, aggressive, energetic run, and then that was giving me the confidence and the framework to trust higher prices on crude. So seeing here, down close candles continuously supporting price higher. Not one single down close was violated in this entire run higher. So textbook bullish order flow and delivery. So looking at this high here, here, and here, that is a 3 drives pattern. But look at how we're taking out the highs. It's very anemic. Anemic run higher here, anemic run higher here, without much displacement or inefficiency on the upside. So as soon as we start trading lower and we form a swing high on that daily chart, that gives me a bearish bias. Why? Because we've already traded significantly higher. We've traded into significant sell side or buy side liquidity, and then we formed a swing high. So after the swing high was formed, I'm going to look for lower prices. So think of this from a narrative-based perspective. Where's the market going to deliver to, and why would it do so? Who's been profitable on this entire run higher? Long positions. So where are the stop losses going to reside for those long holders? Well, we have a swing low here and here. So the market's going to want to run back on those trailed stops. So that's why we saw the expansion lower into here, and why I'm expecting expansion lower into these equal lows here and here. Given that we've traded up higher into this fair value gap and rejected it, is bearish. So a lot of times I'll tell you guys, I want to see how we trade Sunday going into Monday. Well, the great thing is we have Monday's trading behind us. So how do I utilize that information? So seeing here how Monday manipulated higher into a short-term premium into the fair value gap, and then we saw a rejection there. So that then gives me confidence that crude oil is going to expand lower into the sell side liquidity and fair value gap. And another thing that is confirmed to me by the rejection of this fair value gap is bearish order flow. So the fact that we trade up into it, we're unable to get above it, and we smash lower. For example, contrasting that to this price action here, when I'm bullish, I'm not looking at, okay, fair value gap, we trade up into it, we should reject. I'm looking for it to trade to and through it. So same thing here. I want to see us reject this fair value gap and then reprice lower. So High Speed Trading Company, hopefully that was helpful, my man. Thank you. So let me see if I have any more questions, and then if not, going to go ahead and get going. All right, sweet. So I don't see any more member questions here, so going to go ahead and get going. So appreciate you guys all joining us on your way out. If you could hit that like button, leave a comment what you thought, if it was helpful. That's great. Benefits our team here greatly. And with that, going to go ahead and leave you guys off with that analysis. I will be updating you guys in the Telegram as I see fit throughout the week. And with that, have a great week, everyone. Good luck and good trading. Thanks for joining us, Denisha. Enjoy the rest of your week as well. And thanks for joining us. So with that, have a great week, everyone. Take care.